Hello, Professor Sam. My name is Anupam Dashopi. Um, I'll be discussing today about Case 7 Whole Food Markets. I'll be analyzing and examining the current situation of whole food market and what's happening in this particular case and what factors are affecting the decline of the price of the stocks. Let me dig into the case then. At first, let me summarize the whole situation briefly. So there are two different stakeholders involved in this case. First one is Deutsche Bank analyzes current short, and the second one is the company itself, Whole Foods Market. Here, current short recommended to buy the stock of Whole Food Market in 2014, but recently Whole Food Market announced that they have a lower expected earnings and there is a decline of market price. So current short must reevaluate her decision in this particular situation to recommend to buy whole food stock or not. So I'll be analyzing what's going on, considering the financial statements, financial ratio analysis, and the financial forecast as well. In this slide, you can see the stock price of Whole Food Market from 2005 to 2014 in S&P 500 index. So from 2005 to 2009, the price was going up and downs. Especially in 2009, the price was significantly dropped. But from 2009 to 2014, the price was going high, more or less. So what happened in 2014 is there is a sudden decline in price of the stocks. So that makes it important for current short to analyze what's causing this decline. Is it the competitors? Is it the price of the product of whole food markets? Or what's going on? So that would be very important for current short to analyze what's causing the decline of the price of stocks, and figuring out that it will be easier for us to take necessary steps to decide what's happening in this particular scenario. So let's look at the competitors of whole food markets. There are three different categories, such as natural and organic. In that section, we can also call them direct competitors like Whole Food Markets, Sprouts Farmers Market, and the Fresh Market. The second category is conventional grocers. In that category, there are Kroger, Safeway, Super Value, and then third category is Supercenter and Wholesaler, which includes Walmart, Target, and Costco. So wholesale is basically uh, in the market for like long time without a competitors like Sprouts and the Fresh Market, which came to the market in 2008 and started taking a significant market share. By looking at the sales growth of Sprout and Fresh Market, we can clearly see there are a significant increase of growth in those two companies, uh, which is means the competition is increasing. As a result, Whole Food Market has to drop their price of the products, which decrease their profit margin. Um, they had to invest on advertising as well, which increases the cost as well, narrowing profit margin again. And then competing with other companies like Walmart, Target, who has a different stream of volume of sales from other streams. That means they can keep the price down because they have a lot of earning from other streams like furniture or housewares. So they don't have to worry much about increasing the price of or decreasing the price of the whole food market, whole groceries. So they can keep the same price, but and or sometimes they even might decrease the price of those product. So in order to stay in competition, wholesale also needs to decrease the price of their product. So this is a very challenging scenario for whole food market because they are facing increased competition. As a result, their profit margin is going down, thus their stock price is also getting affected by that. So now we will do a ratio analysis of cost of capital. Um, the weighted average cost of capital represents the average cost to attract investors, whether they are bondholders or stockholders. The calculation weights the cost of capital based on how much debt and equity the company uses, which provides a clear hurdle rate for internal projects or potential acquisition. In this case, after figuring out what the cost of capital is, then you can compare it with return on capital to determine if the investor will get a good return on their investment or not. Now, once we figure out the cost of capital, now this time for do some financial forecasting. We already have data for 2014 and 15. How will the wholesale food market will do, but we can also do in the next 5 to 10 years for forecasting, so that we have a better idea what will be the future of wholesale food market be like, whether they will have a bigger or lower return. That will help us determine if the investor will get a return on their investment or not. At the end, it's very important for us to determine the advantage and disadvantage of two different type of forecasting, such as market-oriented measures and accounting-oriented forecasting, because different people can look at the same data from different point of view. So when you talk about accounting-based and marketing-based measures, they're both widely accepted as valid indicators of firm financial performance. There is an ongoing debate about their relationship in management research, especially regarding how closely they are related. For instance, researchers generally conceptualize accounting measures as a reflection of past or short-term financial performance, and market measures as reflection of future or long-term financial performance. However, there is no conscious about the relationship between past and short-term performance and future long-term performance. So it's up to the person who is looking at these data, which forecasting he's gonna use, and how they are gonna interpret the whole data systems. Now, looking at all these data and information from the Excel sheet, we have to come to a decision. Either Karen Short should buy the stock of Whole Food, or she should change her prediction about buying the stock and not buying the stock. So looking at these data, there is visible that there is increased competition faced by whole food market, and especially the two other direct competitors like Sprout and Fresh Food Market are taking a significant share of market. So at present they are going for a decline of the market share, and then sales growth is also decreasing. So I would recommend not to buy the stock right now. Whole food market needs to change their strategy, and because of their new competition from different competitors coming in the marketplace, they have to revamp their whole strategy accordingly the current scenario and try to gain more market share. That ends my presentation. I'm happy to answer any questions if you have. Thank you.